Hello again. My name is Dan Charlock. Today I want to talk really briefly about what I perceive to be a major fork in the road when it comes to inflation and the economy overall. Okay, so this is something I've been thinking about for a long time, maybe a month or two, and it's really, in my opinion, coming to fruition here this summer when we see things start to kind of just develop and mature in this timeline. Okay, so as you can see here on this fork in the road analogy, supply chain disruptions are happening all over the place. To me, I think of rare earth materials. I think of some of the necessary components for some of the wars that we're experiencing all over the face of the planet. We're still dealing with Russia and some of our war efforts there, which had already depleted some supplies. Now we're obviously in the Middle East dealing with the same thing. Supply chain disruptions are likely a bigger deal than what we've heard about. And I'm sure there's a lot behind the scenes there that had to do with that meeting that we had recently in China. I didn't hear much about the outcome of that, but I'm sure a lot of this stuff is interrelated. Obviously, we have ongoing war efforts. That's a big issue. That's going to drive, in my opinion, oil and inflation over time, right? I've heard, and I've been a little bit surprised. I'm not going to lie, that oil isn't already significantly higher priced than it is currently. I believe that is due to just the abundance that wasn't really known about how much oil has been sitting around in our refiners and just in spare capacity. And now that we're seeing those levels depleted and probably some strategic reserves depleted to some degree, I could see prices starting to adjust again, if we stay at this war. It'll be interesting to see how this develops. Oil prices are not just a U.S. price. So, we have experienced very tame prices here in the United States. You got to keep in mind when you're thinking about this stuff that there is a euro dollar market, meaning there are significantly different countries that use the dollar than us. Being a U.S. consumer, it's hard for us to see this, but think of some of the third world countries that are in South America, Africa, Asia, maybe even some in Europe. They have experienced significantly higher oil prices than we have here, partially due to the fact that they have limitations as to how much dollar supply, in other words, currency supply they can get, which then changes the costs for their consumers locally for a price or for all energy prices. But for what we're talking about here, it's oil. So that's another issue that we are facing or experiencing. And obviously, we've heard about some swap lines that have been extended to some of the countries in the Middle East. That is an effort to help offset prices so that these countries don't have to sell treasuries. And then we have here Fed raising rates. Obviously, I've been on the camp for a long time that the Fed would likely lower rates as they have some in the past. We could easily see a scenario where the Fed is forced to raise rates. Yes, I said raise rates, even though this Fed chairman was installed by Trump specifically, in my opinion and most people's opinions, to lower rates, right? I believe that the Fed follows the 2-year rate. So if that rate is going up, I think they're going to have a hard time lowering rates. We shall see. But again, I think that they follow the 2-year. So if the 2-year goes up, which it has in the past couple of weeks, a little bit, but it's been fluctuating mostly over the past couple of months. So if that goes up, that could have a pretty drastic bearing on prices. Okay, and then we get over here to the other side of this scenario, struggling consumer prices. I don't know where you guys stand, but prices are high. Like if you go to a store, blueberries come to mind. The price of a little pint of blueberries has probably doubled in the last 3 to 6 months. Now, I'm not saying that can't go back down, but I'm just saying that there are a lot of prices at the store that are significantly higher than what they've been over the course of the last 6 months to 3 years. And this is placing pressure on the consumer. Okay. If the consumer feels enough pressure, they will change their spending habits, which can cause other recessionary type problems. Okay. Typically, a recession is going to be this other fork in the road where prices actually go down. Okay. Weakening job markets. We have heard a lot about AI and how it's going to take over many of our jobs, right? Who knows how that's going to look? Who knows how that's going to happen? I'm not one that sits here and thinks that no one's going to be working in the next 5 years due to AI, right? The cars were introduced back in the 1920s, and that replaced most of horses, right? Horse and buggies. That didn't mean that no one worked after that, because buggy manufacturers and some suppliers to the horse world were completely shut out of business. Okay, things just shift slowly and over time. This may be faster, but it does not mean that we are going to see a bunch of people who are just sitting around not having anything to do, in my opinion. Falling consumer spending. Obviously, if we have higher prices, that is going to then eventually trickle into lower spending. Obviously, a weakening job market is going to cause people to lose jobs potentially. And that whole side of the scenario and transaction could, again, I'm not saying it will, could lead to something like another recession. Okay, so in my opinion, we kind of are at a fork in the road or a Y in the road where one of these paths will eventually be, I don't want to say chosen, but it will be heading our way. And there's nothing to say that we can't have a combination of these two, right? There's nothing to say that we can't have certain prices still spiking. Maybe it's oil, maybe it's something else, and also be on a recession. So there's a lot of different variables that we are facing here in the next, I guess I would say, 1 to 6 months throughout now in the midterm elections or even the end of 2026. This is going to be very interesting to see how all this unravels and plays out. I think we will see tidbits of a lot of different things here. I think that we will see some of the path B or deflationary aspects. And I also think we will see some inflationary things at the same time. So I know that seems to be contradictory, but that would be my best guess or my base case. If you have any questions about any of this, hit us up. Hopefully this was helpful. Talk to you soon.